um, 162.1 billion of Sukuk were issued in 2019 compared to 124.8 that has been issued in 2018, which represents basically a growth of 30%. This is over the past year, keeping the consistent growth for the past year. Again, a strong sovereign issuance from Indonesia, Malaysia, Saudi Arabia, which basically support of this growth. And this is mainly sovereign sukuk. So basically, we didn't see a very strong pickup on the corporate sukuk. Again, to cover the fiscal needs due to the economics uh, challenges that resulting from the COVID-19. We have seen some issuance in Indonesia, Malaysia, um, in Sukuk in 2020, meaning that during the pandemic, there are some issuance as well. Bahrain, Oman, and Dubai also issued them, while Saudi Arabia, they have issued Sukuk worth of 18 billion US dollars in the first quarter of 2020. So the expectations and the momentum of 2021 is expected to be maintained, especially based on the report that there is a lack of a long-term funding of the history at the history-based funding at the history low rate. Uh, from the other point of view, based on the S&P reports of 2020, there is a tendency to, or they have mentioned three major accelerators that may contribute to the expansions and the growth of the Islamic finance, which is the standardizations, fintech, and basically the focus of SDG. These are regarded from the S&P standpoint are accelerated to the Islamic finance to keep the momentum of expansion. If you look at the below chart of the growth of Islamic finance versus the conventional from 2013 up to 2020, we'll see that the momentum and the competency are very promising, of course, based on the sample and size that has been compiled, with the exceptions of 2018 only, where basically the Islamic finance didn't perform well compared to the conventional. You can see it in the dark blue, which is the conventional, and the light blue is the Islamic. So only in 2018, that was a slowdown a little bit on that kind of expansion. And there are some reasons for that. Among them, the basically depreciations of the Turkish lira, which basically reduce the asset value in US dollars. That's basically contribute to the shrink of the value of the Islamic finance assets. UAE, United Arab Emirates, recorded a very strong performance, but that one didn't really contribute to maintain the position of Islamic finance compared to the what's so-called a conventional one. For Qatar in 2018, basically they recorded a negative growth. So, but in overall, the Islamic finance is still regarded as a promising. With some statistic on Islamic banking, as you know, which is represented still the dominant portfolio of 72.4, a capital market where the Sukuk is at 26.5%, and of course the lower rate, which is takaful at 0.1%. And of course, but if you look at the growth, you will see the capital market growth is more than the banking. It's growing at 23.5% compared to the banking at 12.7, and compared, of course, to the takaful 3.2. Always takaful in the last cluster, market share is very low, penetration is very low, growth is very low. Still, there is a long way to go in takaful business. Banking, asset-wise, is wide, but growth compared to the Islamic market is less. When you go to the breakdown of the Islamic financial system by regions, we see the dominant one is basically GCC in Southeast Asia with 23.5% versus the GCC 45.4%, and the others basically are distributed in the Middle East, and South Asia and Southeast Asia. So that's the three biggest market for that. This is just snapshot. It's not really a detailed one, but just give you an idea about the size of the Islamic finance industry, the Sukuk. We will go back later on to the Sukuk to have an idea, that the Islamic finance, despite the challenges, slowdown, financial crisis, slowdown of the economy globally, the pandemic still basically steady and basically growing. So market players, when we look at the market players, of course, the Sharia is the main one. That's the core business. But we have, from the left side, we have the governments and regulators, because without governments, basically, you can't move, because you have the central banks, you have the Ministry of Finance, you have the security commissions, you have the court, you have the legislations, you have the acts. So those are very important segments in the ecosystem of Islamic finance. Uh, but industry market, we have, in addition to the government regulations, we have a private sector, local and international, even including the conventional, because conventional become also an important players in Islamic finance, because most of the conventional bank, they have subsidiaries, or they have windows, or they have somehow penetration in a way, or investments in Islamic industry portfolio. So they become a very important player, in addition to the retail, which represent the demand side. Also, financial institution, as I mentioned, we have banking, we have takaful, we have Islamic capital market, standard industry players. We have the IOF, they have standards in Sharia standards, they have a accounting standard, they have a governance standard, they have a auditing standard, they have a code of ethics standard. So these are basically international infrastructure financial institutions that they support and provide standards and guidelines and support to the Islamic finance globally. We have, of course, it is based in Bahrain, the IFSB, Islamic Financial Service Board, which is based in Malaysia, provide also standards on the risk management and governance and other related field. International liquidity management, which is based on Malaysia, that provide basically Sukuk for liquidity management, that we'll talk about it tomorrow. We have SIBAFI, which is based in Bahrain, the General Council for Islamic banks and financial institutions. We have the International Islamic Rating Agency. We have the Islamic Center for Reconciliation and Arbitrations. We have the IDB and others. Those are industry international market players also that contribute to the successful story of Islamic finance. Either they support guidelines, standards, training, certificates, and so on and so forth. Then we have the legal framework, basically presented in some of the laws and regulations enacted by the government, in addition to the court, as well as a body to create a check and balance. And in addition to that, additional guidelines that basically will be issued from time to time. In addition to that, we have the other market players, who are the Sharia scholars and other lines of defense represented by the Sharia governance in terms of Sharia board, in terms of the Sharia audit, in terms of the Sharia review. Then, of course, we have the country segmentations, as we mentioned again, banking, takaful, Islamic capital market, wealth management funds, and so on and so forth. So as you can see, these are some of the important market players that sometimes they are in a form of governments, private sectors, sometimes are institutions, sometimes are international Islamic institutions, sometimes are basically market segments, but everyone basically contribute positively to the support of the Sharia to make it as a core in the business of the Islamic financial institutions, whether it is a banking or Islamic commercial bank or a takaful or an investment bank or funds, any kind of business, as long it is within the portfolio of Islamic finance. Now, the last point in the first session is talking about some of the factors that basically looking that create a high demand for Islamic finance. And one of them is basically the Muslim community that demand permissible financial dealing. That's basically the first one. as we mentioned, prohibition of riba. So, if there is no demand, and as you know, financial institution, especially if you put it in the context to make it very clear, in the context of conventional bank. Uh, Conventional bank basically have the concept and the thinking and the equations of profit maximizations, wealth maximizations, and they are really looking where the money and the profit is. And if they don't see a specific demand, they will not go there and invest money. So since the conventional bank have been penetrating to the Islamic finance industry, UK declared it is the capital of Europe in Islamic finance. France is the gateway of Islamic finance in Africa. Some declare as a hub for Islamic finance, and the competition even from the um, conventional hubs like Hong Kong, Singapore, New York, and others taking place. It shows that there is a demand growing, and because of that demand of growing, they want to take market share. That is a very important example. Of course, for us, it's very clear um, that serving basically the faith and the permissible accumulation of wealth. But from the conventional perspective, they don't go to a market segment and invest in it unless they see a potential growth, unless they see a demand and some kind of pressures, sometimes from shareholders, sometimes from the stakeholders, sometimes from the community, to basically recognize and offer Islamic business facilities. So I put it as the first factor, the Muslim community demand for the market for permissible financial dealing and the avoidance of riba. That's to me the key. And the others, of course, financial permissibility, it is in line with the halal demand, which is, according to this sector, it's worth 2.3 trillion US dollars, according to 2016 and 2017 report of the Organization of Islamic Cooperation. So halal industry is basically huge as well. And keep in mind, when the Islamic finance basically create that demand and impact, it creates an impact and spillover of other markets. So we see now the halal food, we see the halal tourism, we see the halal treatments, the halal cosmetic, conservative fashions, entertainments, and other supporting basically clusters within the market that support indirectly the Islamic finance that creates at the end of the day one ecosystem and a kind of blockchains, end to end, which is consistent with the Sharia, either in the food, either in the tourism, either in the finance, either in the entertainments, either in the cosmetic, and so on and so forth. And now that's basically expand the Islamic business. And maybe in the future, the definitions may change because we are not talking about Islamizations of the banking, but we are talking about Islamizations of the market, which consists from all the segments. So that's basically a spillover of the Islamic market. Failures also of the conventional finance to achieve the economic goals and resolve the economic and finance solutions in economic challenges is another factor that basically provide Islamic finance as a potential contributions to solve it, contributing of the conventional finance to the recurrent financial crisis, and the resilience at the same time of Islamic finance during this crisis that put Islamic finance on the table of the global conventional market player as a potential solutions or even a potential alternatives. And it's become, a very good case study for the conventional market player to look at the Islamic finance, how it's behaved, in this financial crisis, what are the secrets of this resilience, and why despite the financial crisis, the slowdown of the economy, the momentum is still double digit, and the demand still there, and the impact of that kind of financial crisis is not that significant compared to the convention. So it's become a good storytelling, and a good showcase for the conventional to look at this phenomena and basically take it into considerations very seriously. This is why we'll see World Bank, we'll see um, IMF, we see the global financial player basically. Now they are opening sections, departments, starting even to provide financing, especially in Africa, through Sharia compliance instruments as a testing, to further subscribe to this um, business model. Looking, as I mentioned, joining the global financial players of the world, we are talking about UK, Hong Kong, Singapore, Europe, US, Canada, and others. So basically shows that there is a value propositions to consider here, which make it basically very prominent in the future. So this is the first sessions that if I recap, we just cover the prohibitions of riba and the current the trend, the market player, the major factors of high demand of Islamic finance. Of course, we cover different prohibitions, but we focus on riba. Then other consideration to be looked at. Then we cover what is Islamic finance and the financial intermediation. Then we look at the current trend of Islamic finance, then the major market players, and at the end, so this is the factor. So if you have any questions, please share with me. Otherwise, you may post it in the checkbox. Then we move on to the next session. You are a bit behind time, but we try to do our best to meet the timing as provided. So we have two main points. The first one is introduction to the Sukuk structure. And the second one is basically Sukuk versus conventional bonds or conventional securitization. So let's start with the first one, which is introduction to Sukuk. I think I will just read this one and move on because I think they have presented in the opening ceremony and everyone know what is Sukuk. But just to recap, they are certificates of equal value, represent the receipt of value of the certificate. It is represented a common share and the rights of the underlying asset of the user fact and services. You may say it is an Islamic bond to make it easy for you, but of course with the Islamic requirements and features, and this is the definition of IOFIN. A little bit to build more understanding, I will go on this criteria briefly because I told you they have been somehow briefed and covered. So number one, I think you know that the sector of Sukuk, which means legal instruments. Sukuk is used for financial justification, can be used as an Islamic equivalent bond, as we mentioned. It is asset-backed, has a stable income, tradable in Sharia compliant trust certificates. Sukuk represents ownership in underlying asset, which is very important here. That's clear distinctions from a bond. The return of the Sukuk derived from the yield generated by the client lease. Of course, this is in the case of Ijara. Then Sukuk are Sharia compliance bond, Islamic bonds, Islamic certificate, Islamic investment certificate, all are basically similar terms that you can use it. Of course, if you want to be very specific, you may Sukuk, but sometimes people may not understand. So they may say Islamic bond, make them understand clearly. So maybe investment, Islamic investment certificate. And here again, form and substance, what we mean by that is basically Sukuk. Again, Sukuk represents the common share and rights of the underlying asset and the use of fact and services. So it could be related to asset, tangible asset, like a building. It could be related to the use of fact, meaning the benefit of the building. We are not talking the building, but the benefit of the building, the use of fact of the building. That's one. And it could be also the service, meaning like, for example, airline service. Airline service, it's provide service from, let's say, Dhaka, Bangladesh to Saudi Arabia, Jeddah for Hajj or Umrah, for example. This is a service. So it could be related to tangible assets, it could be related to the use of fact of the tangible assets, it could be related to the service. And that's how the structure of the Sukuk later on we will see it. Sometimes the Sukuk is designed based on hard structure, if it is related to a building, like securitizations of an asset, let's say 1 or 2 towers. And it could be related to a soft structure, but you don't need a tangible asset, but you need you just use a factor, the manfa'a, like Zamzam Tower, is basically sukuk manafi'. So it is not um, a tangible. The sukuk are not tangible, but are the benefit and the usufruct of the tangible asset. And it could be services, as I mentioned, like training, like educations. You can design a soft structure. For example, the University of Bangladesh, Dhaka, may issue a sukuk for education's postgraduate certification of, let's say, for a degree of economic and finance, or to all their degrees, bachelor degrees, for the 10 years, then issue sukuk. Then they sell it to the investor. So the investor will be having having the ownership of the service educations of the University of Dhaka for 10 years. Then they enjoy this kind of payments and periodical return from the subscriptions, of course, and the fee of the universities and other services related. So this is a soft structure. So this is a soft structure. Why? Because they are securitizing the education's package of, let's say, 10 years. Securitizing the usufruct of a benefit of a service, for example, of airline from one point, let's say, flights from Dhaka to Saudi Arabia, Jeddah. You see, count how many flights a week, and in each flight, how many passengers, and in a month, how many flights, times how many flights in a year, for 5 years or 10 years. You will securitize that kind of service, then you sell it to the investor. This is a soft structure. This is a soft structures that basically create what's called, again, an income from the performance of the underlying services. So the innovations is very open. From the definition, you can see how the potential of designing different structures of, because sometimes people may think that only if you have a tangible asset you can do so. No, if you have a tangible, you can do. And if you don't have a usufruct, and if you don't have a service, and you don't have a tangible assets, can you do sukuk? Yes, you can do sukuk. It should be sukuk in investment sukuk. Like mudaraba, musharaka, there is no underlying asset per se, because the underlying asset will be the business, basically. But you are not securitizing a tower or securitizing a benefit or a manfa. You are investing. So basically, the underlying business will be the asset that basically will be invested based on mudaraba or musharaka. And it goes like this. It shows how flexible is Sharia, how dynamic is Sharia, how Sharia can capitalize on any kind of asset, even patents, innovations, what's so-called copyright. All this could be securitized, or this could be built and have a kind of sukuk based on the type of underlying, as long the underlying asset is recognized by Sharia. So moving on, the sukuk do not represent a debt. This is very important. So again, we go back to the fundamental discussions. There is no riba, there is no loan, so there is no space for debt to be what's so called to be there. That's number one. But the debt could be in some scenarios like murabaha, when it is sold, so it creates a credit. So that is not as a result of a loan, but that is as a result of sales, meaning البيع المؤجل. البيع المؤجل create debts. The forward lease creates debt on the rental, but that debt is not as a result of loan, but it is a result of a permissible Sharia compliance contract. So you have to distinguish. Sometimes when you see debt in Islamic finance, we don't mean the interest over loan that create debt, but we mean by that a debt that creates an obligations as a result of a valid and sound transaction. Again, to add one point, is there any problem to have a loan in Sharia or in a business finance transaction? We don't have a problem. You can have a loan, but the only thing, don't charge interest. That's it. So it doesn't mean when you use loan, or when we have a qard, or when we have a debt, we say, oh, this is a problem. There is no problem. You can use qard, you can have debt. The only requirement is that don't charge interest of that qard. That's all. Other than that, we don't have any issue. Of course, Sukuk is a security instruments, provide return and profit. So we don't have interest over loan, but we have either return or profit or dividends, meaning that some Sharia compliance revenue. And it is assessed by a rated and international rated agency. In some jurisdictions, it's not necessary to have a rating, but in some of them, it is needed. So that one is a different discussions. But normally, they are rated. But not necessarily they have to be rated to be Sharia compliance. Rating is additional requirements either by the regulators or it depends when it is for listing, for example. Some securities exchange require the rating. If it is not for private placement, it may not need a rating. So this one is it depends on the regulation, but it is not a Sharia requirement. It is a regulatory requirements, meaning that if we have a Sukuk through private placements, or we have a Sukuk rated or Sukuk not rated, as long as it is a Sharia compliance from a Sharia standpoint, we don't have problem with that. So some of the Sharia requirements are in the issuance. Some of the Sharia compliance on the requirements. We have number one, the Sharia requirement that we are going to discuss it and focus on it. But I just want to share others. In overall, we have the Sharia advisor requirements. In order to have a Sukuk, you have to have an appointed Sharia advisor or Sharia advisory firm to help you to do Sukuk issuance, because they are the responsible of the compliance. You have to have the name of the Sukuk issuance. Is it Musharaka? It is Mudaraba? What kind of strategy? Because the validations would be benchmarked against the contract selected. Then we have the requirements of to identify the asset of the Sukuk. So if it is a ijara, what kind of asset? Do you have commercial towers? Do you have malls? Do you have hospitals? What kind? Like, for example, one of the Sukuk issuance in Malaysia was the securitization of 2 hospitals. So 2 hospitals were the underlying asset of that 500 million Sukuk issuance. So you have to identify, it is manfa'a, the user fact of the asset. So which user fact? Service, what kind of service? Is it airlines? It is education. So you have to identify that. Also, asset pricing requirement. This goes back to the regulators of the security commissions, how they price. Like, for example, in the cases of some securities commissions like Malaysia, they will see the pricing 2 or 3 times pricing. You cannot exceed 3 times of the pricing of your asset. This goes back to the security commission's requirements on the pricing and utilization of the proceed, where the proceed will go. You are going to raise 1 billion ringgit. You are going to raise 500 million. Where this money will go? Because that's one will determine the status of the compliance. It doesn't mean you comply with all the requirements, but this money will be used for non-Sharia compliance activity. That one will be compromising on the Sharia requirement. So all these are basically part of the checklist, especially from the regulators, to make sure that basically some of the requirements are the requirements of the Sukuk issuance has been basically complied with. From this list, based on the agenda, so we want to focus on the Sharia requirement. We focus on one. So I don't think we can screen all, but at least I have described some of them. Then we just focus on Sharia requirement, which represent the core of the requirement mentioned. And mainly they are benchmarked against the IOP Sharia standard number 17. And before I go further, I have to mention here that when it comes to determine the Sharia requirements and the Sharia compliance, is basically goes back to the Sharia advisor, because the responsibility and the mandate of the Sharia compliance requirements relies lies on the Sharia advisor, meaning whatever the Sharia advisors says, that's the point of reference when it comes to the compliance. Taking into account with two conditions here. Condition number one, the jurisdictions that the Sharia advisor is operating is not a country where IOF is enforced, because IOF will be the reference then. Like, for example, UAE, if you are issuing a Sukuk in Dubai and you have a Sharia advisor, the Sharia advisor has no choice but to comply with the Sharia standard number 17 of IOF. Why? Because IOF is enforced in Dubai. Now, if you are operating in let's say, in Malaysia, whereby you are not required to comply with IOF, so you have another restriction to determine your compliance status, we see the Sharia Advisory Council of the Security Commission. So they have resolutions, they have guidelines, they have law and regulations. You have to comply with the law of the regulation. So the Sharia advisor has no choice but to comply with the resolutions of the Sharia Advisory Council and the Islamic Capital Market Act and other standards as highlighted by the Security Commission. Now, if you are operating in a country where IOF standard is not enforced, and you don't have a national Sharia council, so it will be 100% depending on the Sharia advisor. So whatever the Sharia advisor says, that's the final point of reference for the Sharia compliance in the eye of the court and in the eye of in case of dispute. So that's just to highlight, because here when we say Sharia requirements, and someone may say there are some debates, for example, on some issues. So how to address that? So you will address that debate and diversity in Sharia opinion in the context of what I have mentioned. If it is IOF jurisdictions, so IOF is the point of reference, because IOF is resolution are binding. If you're operating in a country where have a national councils, like for example Indonesia, like for example Sudan, like UAE, like Malaysia, like for example Morocco, so you have no choice but to comply with the resolution. So meaning that those jurisdictions by reference to those standards will overrule the debate. Now, if there is no IOF, no national council, so basically the reference goes back to the Sharia advisor. He's the one who will determine the compliance and select from whatever debates on the ground. Like for example, in LOPSA, Malaysia, which is an offshore center, the ultimate decisions goes back to the Sharia advisor. Whatever the Sharia advisor says, that's the reference for compliance. No central bank, no IOF, no IFSB, no debate, no independent Sharia authority. Is the Sharia advisor will determine that kind of debate. So again, because I'm going to talk about some Sharia requirements, so I just give you a head start that it could be possible debate how to determine the Sharia requirements and the compliance, so it will be understood within the context I have mentioned just now. So when it comes to the requirements, some of the points is that point number one, it is permissible to issue investment certificate by way of subscriptions on the basis of any Sharia nominated investment contract. So you choose. Now the selection of the contract goes back to the issuer. Maybe the issuer has a lot of assets, so it's good for him to go for ijara. He has a lot of productive assets, like for example, ministry. Ministry of Health, for example. I think the best sukuk for the Ministry of Health is to have it sukuk ijara. Why? Because the ministry have maybe hundreds of hospitals. If not hundreds of hospitals, you have many hospitals. So imagine if you have 10 states, for example, or 15 states, in each state 2 hospitals. So we are talking about 30 hospitals. So take the biggest productive hospital, maybe in the capital, securitize them and issue sukuk. And this is what the 500 sukuk issuance of Malaysia did. They took 2 hospitals and securitized them because they are productive assets. So the issuer will select basically what, maybe the issuer has airlines. So he has 2 choices. Either securitize aircrafts because they are tangible assets, 777 Boeing, maybe they have a lot of big good number of aircrafts, they could securitize them. Or if they don't want to put the aircraft under securitization, so what they do, they may go for the service. They have lines, let's say Qatar Airways. Qatar Airways, they have a lot of destinations. I don't know how many, over 100 destinations. Imagine every day how many flights. This kind of package and benefit, well, what they can do, they can securitize it. So either they will securitize the aircraft itself, or they will securitize what? The benefit. If you're talking about the Ministry of Transportation, so what they can do, they can securitize airport. So they have, let's say, 2 big airports. They can securitize the airport. Imagine Hamad International or Dubai International or Turkey, the latest one, which is quite huge in Istanbul. The ministry will securitize the airport. So you see how much is the value. And this the airport is productive asset, again. They may go to the ports, Ministry of Transportation. They go to the ports. Most of the country, they have 1 big or 2 big ports. So they can go there. So what I'm trying to say here is that selections of the contract depends on the underlying asset in the pocket of the issuer. If, of course, no service, no asset, well, they may go for normally musharaka. Musharaka, because musharaka is pulling the investor into the portfolio of the business selected according to the size that has been basically cushioned and fine-tuned and re-enhanced in line with the amount of the size of the sukuk issuance. So it goes back to them. So what you want to do goes back to you. But from Sharia standpoint, we don't have a problem. You select whatever you want because all contracts are valid. It's like buffet. You eat whatever you like. So the second point is permissible to, of course, issue certificate to securitize assets that are tangible. We mention it. Usufruct, we mention it. And services, we mention it. So either you securitize tangible, usufruct, and services, and we add patents, innovations, IPs, intellectual property, and so on and so forth. Whatever assets are recognized. By dividing into equal shares, issuing certificates to their value. As for that, owed as a liability, it is not possible to securitize them for the purpose of trading. Keep in mind here, securitizing the debt is allowed. The issue of securitizing the debt is the trading. So selling debt is allowed. The issue of the debt is the discount. So the issue is the tradability in the secondary market and the possible discount that could be provided. So that's the issue of, but let's say, assume you securitize a debt, then you put it at a par, no issue. So here the issue is a tradability of the debt in the secondary market. The issue contract has the legal effect of the, I will talk about it later on when we talk about some issue related to the securitizations of the debt and how it will be resolved. I think later on in the coming slides. Again, the issue contract has the legal effect of the contract upon which the issue certificates are based. This occurs after closing subscription and the allotment of the certificates. The 2 parties, of course, of the issue contract are the issuer and the subscriber. These are the 2 main players, meaning the obligor or the issuer and the investor, who are the subscriber. These are the 2 main. The others are facilitating, as we are going to see in the parties involved in the sukuk issuance, legal advisor, Sharia advisor, trustee, SPV. All these are facilitators. But the 2 actors, the 2 heroes, the 2 main market players is the issuer and the subscriber, or the issuer and the investor. These are the 2 contracting party, like seller and a buyer, these two. The others are facilitating the process. Relationship between the two parties to the issue contract is determined on the basis of the contract. If it is murabaha, it is a buyer and seller. If it is istisna, buyer and seller. If it is sukuk salam, is a buyer and seller. If it is a musharaka, it is a partnership. If it is a mudaraba, it is a partnership on profit. If it is musharaka, again, partnership on profit and loss. If it is ijara, it's a relationship of a lessor of the lessee, and it goes like this. So this is what I mentioned. When you determine and select and identify the contract, it will have implications to determine the status of the two parties, how you will be acting. Are you a buyer or a lessor? Are you a partner or a wakil? This one based on the contract selected. The relationship between the two parties, namely the issuer and the subscriber, shall be governed by the contract as mentioned in the sukuk issuance. So basically, the impact. If it is sell, we say what you are selling. If you are doing lease, what's your asset to be leased out? If you are saying manfa, what kind of manfa you are referring to? You are serving, what kind of service you are referring to? Is it education or what? So that's the thing. And the mere conclusions of the contract will be basic, will give rise to the legal implication and effect of the right and the responsibility and the obligation of the two parties, which I have mentioned it before, meaning to determine the relationship, rights, obligations, and so on and so forth. It goes back to the contract. The next point is related to the requirement of the prospect. Prospect basically, we call it sometimes notes, and if you have time, and I don't know how it goes, but if you have time, we may share some real documents, live documents for you to have a look maybe later on. Sometimes we call it the PTC, principal term and conditions. Sometimes we call it prospect. Sometimes we call it notes of the sukuk issuance, and it goes like this. But it's a kind of documents that basically capture some information as mentioned and highlighted in these slides. So the point number one is that the issuance of the prospect represent the issuer invitation to subscribe. In which case the subscriber, who are the investors, basically represent an offer. Subscriptions represent an offer. As for the acceptance, it is the issuer approval of the subscriptions, unless it is approval otherwise. Meaning that what I think is the prospect sometimes represent a kind of offer and acceptance. So that's what has been issued. And if you accept it, so basically the sukuk issuance will be respectively issued according to that. So sometimes the protest will be considered as an offer and acceptance. It could be, but it could be determined in a different, what's called, different documents. Prospect would be the reference of the sukuk issuance process, consolidate all the information. Then basically, different separate documents could reflect the offer and acceptance. So some of the key points that related to the prospect is that, number one, number one is that the prospect must include all the contract. I try to go through briefly on that and quickly because there are 2-3 slides on this, so just to manage the time. But I will not read word by word, but just summarize the points. Then later on, we will have the slides to read further. So some of them, it include all the contract conditions, statements of the participant, legal positions, the right or obligations, sometimes statements, the originators, the trustee, the parties, and the different payments of the agents and other things related to the contracting party. Also, it's include the identification of the contract. What kind of contract is this? Because as I mentioned, it will impact the certificate, whether it is ijara or istisna or mudaraba and so on and so forth. So you will know it from there. Yeah, then the contract also that form the basis Sorry, yeah. Also, the contract that form the basis of the issue must be completed with respect to its elements and condition. It should be include all the conditions that conflict with its objectives and rules. Must basically mention the obligations to abide with the rules and principles of the Sharia, because this is a Sharia compliance investment. And there is a Sharia board that approves the procedures and the issuance and monitor the implementations. Also, the process must state the investments of the realized fund and the asset into which the fund are converted will be undertaken, which is a Sharia compliance, which has been mentioned at the beginning under the title of utilizations, where this proceed will be utilized. In case of musharaka, basically the process must take stated that each owner of the certificate participate in the profit and loss. So if it is musharaka structure, so there is an undertaking to be participate in the profit and loss, because this is what musharaka is. It's a profit and loss sharing. And if it is, and also must include any statement that affect the issuer of the certificate's liability to compensate the owner of the certificate up to the minimum value of the certificate in a situation there is a kind of negligence. This is the guarantee. We'll talk about the guarantee later on, meaning that in case of negligence, we'll be undertaking to compensate the partners, either musharaka or mudaraba. That one could be stated, and this is under the guarantee. We'll talk later on in details about the guarantee. Also, it is permissible to have an independent third-party provider guarantee free of charge. And the debate here is a free of charge again. So what's the view of the Sharia advisor? Because this is in compliance with the IOFI and the International Fiqh Academy, that the guarantee, if it is provided by a third party, it will be free of charge. But in case some practices like Jordan, like Malaysia, like Brunei, like other jurisdictions in the CCC country that would provide a guarantee with fee, that could be area of debate. If you are in a IOFI compliance, so you have to put it as a free of charge. If you can't, basically, it may be an issue with the IOFA compliance. If you have jurisdictions, there is a debate, so you may have the options to subscribe to different view if you have that kind of tendency. Also, it is permitted that the issuer of the certificates and to offer some tangibles or personal guarantee with respect to the wrongful acts and negligence wrongdoing. So you can put a collateral. It's a kind of guarantee, like a guarantee performance, to make sure that basically the project is performed according to its objective. This is also allowed. Also, it is allowed and permissible to undertake to underwrite the unsubscribed issues in which the obligations of the underwrite is based on a binding promise, meaning that, let's say, the Sukuk, normally the experience of this Sukuk issuance, they are always oversubscribed in the most of the time. I mean, sometimes subscribers go to even 9 times, 9 point something. And the worst 2 point something, 3 point something. But sometimes if it's happened that there is no full subscriptions of the Sukuk, so basically the institutions can have that undertaking. What is left will be underwritten by me to make sure that the Sukuk issuance is very successful. So that one is allowed as well, but the undertaking, the undertake should not receive any commissions of this kind of undertaking, meaning you don't get commission in doing that. This is from IOFI standpoint as well. It is permissible to issue Sukuk on a short term, long term, medium term, according to the Sharia principle. Also, the Sukuk may also be issued without specifying a period, depending upon the natures of the contract is issued. This is why we have what's so-called short term and long term, and we have what's so-called perpetual Sukuk. And we have also the exchange Sukuk, exchangeable Sukuk, meaning that there is no maturity. It will be just take it and substituted with shares of the obligor. Those kind of innovations basically also are accommodating in Islamic Sukuk structures, which give, as I mentioned, very convenient environments to anyone to subscribe to embark on the Sukuk issuance. Also, it is permissible for the issuer of the certificate to hold to adopt permissible method of managing risk and mitigating fluctuations of distributions of the profit. Here, basically, you have a problem here. I will not say a problem. I mean, you may have a challenge whereby how to make sure that your distribution, your periodic distributions throughout the tenure of the sukuk, taking into account, let's say a sukuk of 5 years, 10 years, that periodical distributions and periodical distributions in a sukuk, so sometimes it is a semi-annual, sometimes it is a quarterly, sometimes it is annually, or it depends on the structures and what's the convenient, but most of them are semi-annual. Now, how to make sure that the profit distributions come on time without any delay or default in payment. So here there comes what's called the profit equalization reserve, which is allowed by IOFI, allowed by the IFSB as well, that could be used as a mechanism. Also, they allow the reserve as well to be built under what's called the liquidity facility of the sukuk issuance, or they use also what's called takaful structures in the context of the what's called sukuk issuance. So there are a few options, either reserve, either a profit equalization reserve or a takaful, but it's the objective is to make sure that you are managing and smoothing the return throughout the tenure of the sukuk without any default. So you have to create that kind of mechanism. You cannot have semi-annual 6 months, then you tell them, sukuk, there is no money this half year, so wait until next year. So it doesn't attract investors. So you have to make sure that your commitment is there, and normally it is done through this kind of mitigations and a mechanism to manage the fluctuations of the profit distribution. So, or we call it under the IFSB, smoothing the return of the. It is used in the investment structure, it is used in the investment account, it is used in sukuk as well. This is some of the most important points which comes to the Sharia requirements. And we shall move to the, if there is any questions, of course, I will welcome the questions. If not, I will check the checkbox later on, otherwise we'll carry on. And I just remind Raisa, if the time comes for the break, you just let me know, because I'm not tracking really the time of Bangladesh. Let me just check the box if there is any question before I carry on. That box.
Dear participants, if you have any question, then you can raise your hand or you can write in the chat box.
Yeah, I'm checking the chat box for the time being. Maybe I found something. There is nothing anyway. So feel free to ask directly or put it in the chat box. And if my speed is, if I'm speeding, so you just ask me to slow down, or if you want me to give more details, just tell me just to meet your expectation on that. So when it comes to the sukuk stakeholders, if I may carry on with the discussions, when it comes to the sukuk stakeholders, there are important players and the stakeholders with regard to the sukuk issuance. Some are internal and the other one are external. This is the external one. Let me start maybe with originator. Originators, why the originator we start with? Because the originator, or sometimes we call it the obligor slash agents, because the obligors always play dual role, is the obligor originator slash agent. So the obligor is the one who needs money, meaning that if it is a kind of contracted party, he's the first contracting party. Depends whether ijara or sales. So the originator or the obligor is the first important party. Second party is the investors. These are the two. These are the two contracting party. In a normal typical transactions, if sale, it's a buyer and a seller. It is a lessor and a lessee. It is a mudarib and capital provider. It is partner one, partner two. It is wakil and principal. These are the two Mudarib and capital provider. These are the two contracting party. The others are facilitating how these two talk to each other. Through standards, guidelines, governance, regulations, and then the Security Commission. In normal transactions, you go to the supermarket, give the money, and take it. In a normal situation in banking, there is a customer and the bank. You go walk in, you open an account. But this one, because it's an investment, and normally it is a big amount, and normally there are many investors, so it's not that shop you can knock the door and walk in. So it is in a specific space under a specific regulator. There, the facilitators come in to make this one come through that comply with the regulations and comply with the Sharia. So first two is the originator, that the one to raise funds, let's say the Ministry of Health, and the investor. Who are the investors? Or first of all, who are the originators? Originators could be government, could be private sector. Governments like a government agency, I mean by that, like Ministry of Transport, Ministry of Health, Ministry of Defense, all the ministries that need money. That's number one. Could be corporate, like big corporations that want to, like oil and gas, electricity suppliers of the government's waters, the distributions, governments. So these are the originators. They need money. So the other one is the investor. Who are the investors? Of course, we are talking here about institutional investors. Mainly they are banks, pension funds, the capital operators, what's so called fund managements, any kind of institutional investors, finance company, and they are also Sukuk that high net worth individuals could reach as well. And there are also, as we are going to see maybe tomorrow, there are retail Sukuk issuance, meaning that the investor could be public, whereby the governments, because of the objective of the financial inclusions, try to lower the denominator, the amount of the certificate of the investment to a level where everyone of the citizens can buy it. So they will be part of the financial inclusions, part of the prosperity, and part of the wealth distributions on the society. But if you are talking, these are very specialized Sukuk issues. But if you are talking about the typical one, the investors are pension funds, the capital operators, and big corporations and treasuries, and basically Rita Kaful, insurance, and so on and so forth. Those are the investors. Now, in order to facilitate that, we have what's so called the investment bank, which is not here. It could be with the corporate advisor. We have the investment bank. Investment bank is the one who basically, or before the investment bank, we go to the regulatory. Regulatory is another player, meaning the regulator. Regulator meaning the exchange, meaning the Security Commission. Because the submissions go to the Security Commissions, and the approval comes from the Security Commission, and the listing will be in the stock exchange of the Security Commissions, and you have to comply with the guidelines and the standards of the Security Commission. So, meaning you have to comply with the game as being subscribed by the regulator. Then we have the investment bank. The investment bank is normally the one to coordinate the entire business. Is the one who basically coordinate with all the parties and do also the submission to the Security Commission. Then we have the SPV. The SPV is a kind of a vehicle that is created by the originator. And that SPV basically would be the custodians that taking the representing the interests of the investors and taking basically the asset in its portfolio and basically doing the payments, getting the payments, doing the distributions. In case of the collapse and the bankruptcy of the originator, the SPV is the one who will keep the underlying assets sound and safe for the interest of the investor. And we have the corporate advisor, meaning the lawyers, that they will look after the legal documentations to make it sure it is comply with the law. Then we have the credit enhancements, like for example, if the rating agency, through their assessments, they don't give a very good credit rating to the originator, to the Sukuk, they may go for a credit enhancement, whereby a third-party guarantor, like for example, in the context of Malaysia, we have Dana Jami, which is a government agency that provide the guarantee and the enhancements for Sukuk and bonds. And if not a third-party guarantor, so that kind of enhancement will increase the rating to a very high rating of AAA or so on and so forth, because whatever potential risk has been mitigated through a third-party guarantee. That's the credit enhancement. Then the rating agency will give the rating, and the Sharia advisor will endorse that everything is in order. When it comes to the contract, when it comes to the structures, come to the PTC, principal terms and conditions, to the legal documentations, to the sequence of the executions, to the combinations of the contract, all are in order. Then the Sharia advisor will come with what's so-called the Sharia pronouncement. And the Sharia pronouncement is the storytelling, what this Sukuk is about, what are the key highlights, and potential issue, if there is a potential issue to be captured, then at the end of the day, the endorsement is there. So maybe later on, or maybe tomorrow, I don't know, when we have a proper time, we can share some of this live pronouncement with you for your reference. But normally, the prospect or the notes or the PTC comes with the pronouncement. Pronouncement, again, we look at the structures, term and conditions, or PTC, principal term and conditions, then the legal documentation, sequence, and combination. Then the Sharia pronouncement will be issued. That this is the Sharia compliance, which will be coupled with the Sukuk issues when it's submitted to the Security Commission for approval. So this is the external party, which are very important, and they play a very important role to make the successful story of the issuance. Now the internal one, the internal party, you have what's so-called the owner of the product, which is the Islamic Capital Market divisions. Then you have the Sharia departments that normally go through this case. In case, I mean, the investment bank is basically carrying on the issuance because the Islamic banks or the investment bank, if they take the issuance mandates, it depends on the negotiation. They may take the Sharia advisory as part of the package. Why? Because investment bank, they have a Sharia advisor. So what they will do their investments mandate plus the Sharia advisor compliance, whereby they are using their Sharia. If they say, no, we don't want your Sharia advisor, we have a third-party Sharia advisor base. So this is negotiable. But let's assume the investment bank basically leverage on its Sharia board to have the endorsement. Then it should be internal process. The Sharia department will look at it. Then it goes to the legal department, will clear it. Then it goes to the risk management, they clear it. Then it goes to the Sharia board. When you go to the final approval, then you go normally to the risk management committee, which is a high level, that everything is okay, good to go. This is internal process within the institution. But importantly, that people see and people interact is normally with the external process. Those are the important market player to contribute to the successful story of the Sukuk issuance. Moving to the next, if no questions, moving to the next, which is the asset. Yes?
There's a question in the chat box. Someone is asking that, please tell us how to filling up with the Bangladesh Security Exchange Commission for issuing Sukuk bond.
Can you read the question, because I cannot see it, I cannot see the question, I don't know why.
There's a question in the chat box. Someone is asking that, can you please let us know how to filling up with the Bangladesh Security Exchange Commission for issuing Sukuk bond?
Well, just to share with you, unfortunately, I don't have details on that process. I'm just giving a high level process description how it is happened in other jurisdictions because unfortunately I'm based in Malaysia. So I'm not aware exactly about, but if I benchmark against what is practiced in Dubai, what is practiced in Malaysia, is basically the Security Commissions has a guideline. Like in the case of Malaysia, we have Sukuk guidelines, then we have securities, what's so called guidelines, then you have what's so called the how to prepare your PTC, meaning the prospect, what are the information required for the PTC, all the details like the name of the share. It's more comprehensive that we have mentioned here than the IOF one. Meaning this is why you will see the board of directors name, the shares, the address, the business, the type of business, the value of the Sukuk issues, all the details will be there. That one should be comprehensive enough. That's you have to be filled up, the applications, then the Sharia advisors, all basically the requirements you have to comply with, the guidelines, and then upon completion of that guidelines, basically you will submit the proposal. And normally when you submit the proposal, it comes with the number one, the structure, in addition to the PTC, it comes with the structure of the product. Let's say you are taking Ijara, so you have to provide the Ijara structure. Number one, you have to provide the PTC, the one I mentioned. And number two, you have to provide the sequence of the execution. So if these three are approved by the Sharia board, basically you go to the Security Commissions to submit. So meaning all the documentations, which in compliance with the guideline, along with the Sharia pronouncement, before you go to the legal documentation. In practice, the legal documentation will come later. What comes first is the structure, PTC, and the pronouncement, Sharia pronouncement. The PTC is very comprehensive that give comfort to the Security Commissions. Who is the originators? What kind of business they have? Who are the shareholders? Who are the board of directors? What are the address? And all this information, of course, along with the statements, financial statement, all the reports, that make it a very comprehensive enough that the Security Commissions knows who's this guy. If you are oil and gas, so basically all the information are there. If you are, let's say, a ministry, all the information are there. If you are big corporations, all the information. So you know who I am, we are comfortable with you. Number two, basically, who is your Sharia advisor? Number three, what's the PTC and what's the Sharia pronouncement? Now, if the Security Commissions, normally in practice, Security Commission has in-house Sharia advisor for approval because they don't do third-party approval, they will approve themselves. So in the context of Malaysia, so basically the Security Commission will give approval. And this approval is basically based on include the Sharia Advisory Council approval, meaning you are good to go. Then you will launch your issues within a year. So that's how it is a practice. I do assume if a country has a specific law and regulations, and it have a guidelines and so on and so forth. So basically you follow that kind of, if let's say there is no such guideline, there is no specific divisions that look after the Islamic capital market, there is no Sharia advisor, there is nothing. So basically it will be on an ad hoc basis, meaning that the Security Commissions will receive an application of Sukuk issuance similar to the bond application, because definitely they have a bond issuance. So they will submit to the custodian of the bond issuance the Sukuk, and the Security Commissions with third party will go through it and validate. Let's say they will appoint third party, they go through, based on the validation of the third party, they will give their endorsement that this is Sharia compliance. This is in case, as I mentioned, the Security Commissions has no ecosystem, has no infrastructure, has no law, has no regulation, has no guideline, has no guideline, has basically no Sharia department in-house has no Sharia advisory council. If they have nothing, so basically the submission will go to the bond issuance department, where they leverage on the third party for validation. Then they will pronounce the Sukuk issuance based on that. And some of them, they have, but not very comprehensive. So this is what I'm saying. It depends on each country. Some Asian country, like for example, Dubai, they have the guidelines, you know, and those people also third party who they don't have, they may leverage on IOFI guidelines, standard 17. They leverage on the IFSB guidelines for the Sukuk issuance, even they don't have. But if someone has, like Dubai, like Malaysia, like others, so basically they will follow their SOP. I hope I have answered your question.
All right, thank you so much, Dr. Ihsan. Now we have to take a lunch break for 1 hour. Dear all participants, you can now enjoy the break. We will meet again after 1 hour. Thank you very much.
Thank you very much. See you after 1 hour.
Assalamu alaikum. Welcome back from the lunch break. Hope you enjoyed your lunch. Over 2 days training will be ended at the 3:30 p.m. After that, you have to join your our closing ceremony by clicking the link which will be given to you in the chat box as well as through email and in the WhatsApp groups. Now, Dr. Ihsan, you can start your presentation.
Okay, thank you very much. Assalamu alaikum wa rahmatullah again. And let's come back to our session. And I think we have 1 hour to go. Let's try to get as much as we can from the remaining time. Again, as I mentioned, if you have any question, post it in the chat box, or you can ask it directly. I just have to check the box and I found a question. Let me answer this question that I carry on. This question is related to the SPV, because the question was saying that whether the SPV and the trustee are the same, because I put them in one box. Actually, to answer you what's so called accurately, there are two separated entities, but they work together closely. This is why I put them in one box. Basically, the trustee is a permanent entity that provide trust business for investment bank, for fund managements, for endowments, for waqf, and so on and so forth, which is under the regulations of Mortgage Security Commission. But the SPV is just being a vehicle that has been established by the originator or the issuer for the purpose of the Sukuk, whereby basically the assets of the issuer will be moved to the SPV through a declaration of trust. Then the SPV will be the responsible, but the one who will basically handle the that kind of custody is the trustee. So what's so called the SPV, we call it also a bankruptcy remote entity, meaning that in case the originator or the issuer collapse, so basically the asset will be safeguarded with the SPV. Now, the trustee of the SPV trust is the trustee. So that's how it works. But technically speaking, they are separated. And once the Sukuk issuance mature, the SPV will be resolved. Will be resolved no more. But the trustee is basically a normal business entity that's operating the market, which basically entertains Sukuk issuance and other business as well. So carry on to the next slide, talking about the difference between asset-backed and asset-based Sukuk. So we are saying that some of the features, asset-backed is basically Sharia compliance asset-backed. So here we are talking about specific asset. And here mainly we are referring to a productive assets, which are basically tangible. Like for example, as I mentioned, hospital, hotel, port, airport, hotels, factories, and so on and so forth. Commercial towers, commercial residence, and asset base basically is a Sharia compliance business per se of the issuer, which means it's a kind of a pool and a portfolio of business that will be identified by the issuer for the interest of the investor. And the asset back normally it is off balance sheet, which means it is happened through sales. In other words, if I take the example of the commercial tower or a hospital, if let's say Sukuk issuance is based on Ijara, then the issuer will move the hospital from the balance sheet of the issuer to the SPV. And the trustee of the SPV is the trustee itself. So in case the originator is bankrupt, so the hospital is safeguarded. Why? Because it's under a bankruptcy remote entity. So it doesn't follow the balance sheet of the issuer who collapsed, but because it is off balance sheet, under the custody and the safety of the SPV, which is managed by the trustee. But the asset base, it is on balance sheet, meaning that if you invest in the ministry, you will be invest in the hospital business. And the hospital business is on the balance sheet of, let's say, the ministry or any issuer. So basically your money will flow into a business portfolio of a pool of the hospital business. Then you will be like, this is why normally asset base, asset back, it is normally Ijara structures. And asset base, normally you will see Mudaraba and Musharaka. The equity structure, normally they will go for asset base. Why? Because the issuer, the investors will inject the money, in the portfolio of, let's say, hospital business, which is on the balance sheet of the issuer. Versus Ijara Sukuk, whereby the hospital will be shifted from the balance sheet of the issuer to the SPV. So that's the two different things. And of course, for the funding cost, it's mainly based on the strength of the cash flow from the asset, meaning the cash flow comes from the productive and the performance of the asset, because they are identified, could be hotel, could be hospital, could be airport, could be aircraft, could be commercial towers, it depends. Whereas in asset base, the funding basically cost is a mainly market driven, depending on the credit standing of the originator or the issuer, how strength and strong you are, and how is your credit standing in the market. So that's basically the funding cost, which respectively have relation to the what's so-called rating of the asset base is basically coming from the standing of the originator or the obligor. How is your rating? How strong you are? How's your cash flow? How's your asset? How's your financial position? How your financial statement is strong? Based on that, they will give you a rating. Let's say if you are, this is why governments are always they get a good rating because of your status. But if let's say big corporations like oil and gas or telecommunications, so basically their credit standing is always good. So this is why they always get a good rating. But if let's say corporation is not that strong, is not that weak, has a problem, so basically their standing is not that good, so the rating may not be good. Versus the asset base, where the strength is coming from the cash flow from the securitized asset, meaning that what is the quality of the asset subject to securitization? If we are talking about commercial tower, so what's the value of this asset? What's the quality of this asset? If we're talking about hospital, what is the quality of the hospital? What's the performance? How is the cash flow, strength of the cash flow of this hospital, and so on and so forth. So the rating will come from that kind of assessment. So in other words, to make it to illustrate it from a different angle, the Asset base, the assessment will be on the underlying asset that has been identified. The asset base will be on the issuer, assessment of the issuer. Asset base, the assessment and the evaluation will be on the underlying asset that has been identified for securitization. Asset base is an evaluation of the issuer himself. So that's the two different. Now, the more importantly, which is not mentioned in this comparison, more importantly, in case of default, in case of financial collapse, in case of bankruptcy of the issuer. So basically in the asset back, the investor will recourse on the SPV, meaning they will recourse on the asset in the hand of the SPV. But in case of asset base, they will recourse on the originator. This is why, if you look at the risk, asset back versus asset base is more risky. Why? Because the investors somehow are not really per se safe, because if the originator go down, the investor may go down respectively, and they will get whatever they can catch. But asset base, if the originator or the issuer goes down, so the asset are safeguarded through the SPV, because the SPV is based on trust. And before the issuance, the asset have been declared as a trust in favor of the investors, which will be managed by the trustee. Moving to the second point, which is an overview of Sukuk. I try to go briefly here, so you can review those figures later on, just to move a bit faster to catch more information. This is an overview of the Sukuk, and as you can see, if you just zoom to the Sukuk directly, Sukuk basically represent 22% from market share, compared, of course, to the dominance, which is banking. Always banking is number one. And looking at the segmentation compositions, figure of 2019. So we'll see also banking, as I mentioned, 72 versus Sukuk is the same actually. But the outstanding in according to jurisdictions, we'll see the balance of 83.6% billion compared to 88. Compared to 89. Compared to 16.4 billion. Here, Sukuk issuance by type. So we are C sovereign 56, corporate 36, multilateral organization like IDB and others 80%. We see also the global Sukuk issuance by sector. We see governments, or the sovereign Sukuk is basically the dominant of 56%, followed by the Islamic financial institutions of 37.4%, and the balance is distributed, accordingly. Looking also at the Sukuk issuance trend from 2004 to 2019, you see the curve is moving up towards 2019, meaning there is a good momentum, despite the a drop in 2015, but it pick up. The drop start from 2012 slowly, then substantially in 2015, but 2016 pick up until today. This is some references with regards to the green Sukuk. 3 Sukuk issuance in Malaysia, 2017, 18, and 19, with 690 million for the first issuance, 222 million for the second issuance, and 40 basically 470, 17, 550, and 245 respectively. In IDB also 2019 issuance, UAE 600 millions in 2019. Indonesia. In 2019 was a good year for green Sukuk, whereby at the same year, Malaysia, IDB, UAE, and Indonesia basically went concurrently on this kind of Sukuk issuance. So that's briefly on this review. You can maybe read it carefully later on. Let's move to the following sessions, whereby we try to talk about the comparison between Sukuk bonds and shares. I think we didn't put in the third one is shares, bonds, Sukuk, and shares. I just forgot to put shares in. So number one, for the tenures, basically they are the same. You have short, medium term. Of course, for sure they are not listed to be short or term, but the behavior of the market will determine. If you want to have it for a capital gain, it will be short. If it was for dividends, it will be like medium, long term. For financing category, bonds are regarded as debt, but for Sukuk, they are not debt. They are basically asset-based or asset-backed based on underlying ownership of the investor over the asset. Of course, shares are equity underlying, not necessary unless they are collateralized for the bond, not necessary to have underlying asset, but sometimes they may have. But for the Sukuk, you have to have underlying asset. And normally they are tangible in the most of the time, or acceptable type of asset. Like we have mentioned, we have tangible asset. It doesn't mean it is not tangible. It's not an asset. So we have to understand this one very clearly. Why? Because ijara, building, is tangible, but the usufruct of the asset is not tangible, but it is asset. The service is not tangible, but it is asset. IP is not tangible, but it is an asset, and so on and so forth. So it doesn't mean it's not tangible, it's not an asset. So we have to have this understanding very clear. And of course, shares are equity. Claims, normally it is a fixed and an absolute amount. They have both. And for the Sukuk, normally it is a claim over the performance of the underlying asset. So normally it is even though in Sukuk we have fixed and floating, but either fixed or floating still related to performance of the underlying asset. So meaning the fix in the conventional bond is liability, but the fix of the Islamic, especially in the Ijara, is based on the rental cash flow income projected, which is again tied up to the performance of the underlying asset. For the shares, capital gain and dividend, as I mentioned, either you buy and sell, you make gain, or you hold it, then you can get dividends at the end of the year. And capital gain is based on the value of the shares upon trading. Dividends, it depends how much is dividends, based on the performance of the corporation. Then the dividend will be distributed, and based on how much shares you have in hand. Total return, of course, fixed, non-predetermined cash flow when it comes to bonds. So you know already the amount, the fixed, because it is an interest over the loan that you have provided. So it is fixed and predetermined loan. But when it comes to Sukuk, it's not guaranteed in return because it's more related to the, again, as I mentioned, the performance of the asset. But it could be fixed, like the Ijara, and it could be non-fixed. It could be floating as well. All are basically acceptable from a Sharia standpoint. Depends on the contract that you have selected. If it is equity, like Musharaka and Mudaraba, you cannot guarantee that. But if it is fixed, basically, you can have this kind of a commitment because of the Ijara contract. Shares, no guarantee in return. For the funding purpose, basically, it is unrestricted, meaning you do whatever you want to do. But for the Sharia, as we mentioned, utilizations of the asset is utilization of the proceeds of the Sukuk is very important. So it has to be raised in a Sharia compliance manner, and it will be utilized in a Sharia compliance manner. So that's basically the key points on the differences between the two Sukuk and bonds. So when it comes to other capital, Islamic capital market, I think we have mentioned already the shares in the comparison. So bond, Sukuk, and shares. So shares is regarded as one of the instruments and products of the Islamic capital market. So that's part of the comparison. In addition to that, what we have, just to recap, that Islamic finance, it has a banking, takaful, Islamic capital market. When we look at the capital market, you have the debt market and equity market. So basically, you can say that the debt market or the Sukuk markets represent or fall within what's called debt market in the conventional terminology, where we have different types of Sukuk. Even though in those structures, you may see equity structure, but still it is regarded as a Sukuk market, equivalent to the debt market in the conventional. Equity market, we have stocks linked, we have REITs, we have some derivatives, we have Islamic structured products, we have funds, venture capital, and private equity. Now, when it comes to some of the issue related to the legal and rating impediments, some of the challenges, this is a very common issue, actually, everywhere. It is a bit challenging, but I think the issue could be resolved in the future when, progressive adaptations of Islamic finance is done, when basically more commitments of the regulators is undertaken, and time is also an element of resolving this issue, because this one cannot be done over time. It may require sometimes, because it is related to the law, regulations, it's involved governments, it's involved parliament, it's involved, a very serious commitment, because you are revisiting, readjusting the legal infrastructure of the country. So it is not easy task to do. So we have to acknowledge the challenge. But it is, as I mentioned, a long journey that could be resolved in the future. Here the issue is that Islamic banking are operating under the regulation of the Central Bank and the Security Commission. And both basically regulate conventional finance and Islamic finance. So conventional finance, they don't have a problem. But when it comes to Islamic finance, you may have some challenges. The challenge is that you are subject to the existing law. At the same time, you are required to comply with the Sharia law and regulation. Now, when it comes to the law or the Islamic finance, as we mentioned, we have a Sharia law and we have the common law or the civil law, depends which jurisdictions you are operating in. And in the Sharia law, you have a Sharia standard, you have guidelines, and the common law, you may have an Islamic financial act or not. You may have regulations pertaining to the law or not. It depends where you operate and when the government will issue. Till that time, you are operating under the conventional space. So these kind of challenges vary from one country to another country. Bangladesh is different than Malaysia. Malaysia is different than Singapore. Singapore is different than Saudi Arabia. And it goes like this. If you are lucky enough, so you may have a very comprehensive ecosystem and comprehensive legal framework and comprehensive and sound infrastructure that helps you. If you are not, you may suffer from some ambiguity and some legally challenges that you should operate within until times will be improved. And as I mentioned again, the issue here is that you are subject to the law of the country. In addition to that, you want to comply with the Sharia, then potential conflict may rise. So how to handle that issue? And it is not within the financial institution to resolve it. This is why we put it as a legal impediment, as a legal challenges. So the issue will be more crucial if we dive more to the litigations framework and the reference of the law. As you can see, sometimes in the most of the international Sukuk deals, they always put the UK as a reference in case of dispute. And if it is a local domicile issuance, you will be the law of the country. Then when it comes to the litigation framework of that country, you may have some challenges here and there. So let me give you the case of Malaysia here. On the litigation process, if in case of default, in case of dispute, so basically what you have the power of the Sharia Advisory Council of Malaysia. This is by the virtue of Section 56 and 57 of the Central Bank Act. Number two, you have the decisions of the Sharia Board, who are Sharia Advisory Council of Bank Negara, which are basically enforceable in the market and binding on the market. On the other hand, you have a procedural law, which is rule of the court in 2012, and some other procedures law basically related to Islamic finance. You have conflict of law. Before that, you have muamalat divisions. This is applicable to non-finance business. Then you have the civil law, basically, which is basically Islamic finance cases to be tried at the civil court by judge and not in the Sharia court. In the Sharia court, only issues like divorce and marriage and mirat and so on and so forth. Now, the conflict of the law will take place here, where basically how to reconcile between the requirements of the law of the land in case of a dispute where the point of reference is the law and your Sharia compliance requirements. And here in Malaysia, what they have done, they create what's so-called the Harmonizations Committee that was set up in order to address this issue. So what they have done, they create what's so-called Harmonization Committee, and they look at the standards of the central bank and the SC security commissions and the Islamic finance requirements, and try to look at the where the conflict is, where the contradictions is, and how they can address those in the local jurisdictions. Of course, the law, Sharia law, cannot be changed. You cannot change the Sharia law. Some things which are may change, some things which are flexible to accommodate, but some of the regulations of the law in Sharia cannot be changed. The only one that can be changed is the man-made law, civil law or the common law, because you can do it through the parliament, some modifications, amendment, some supplementary enactments that can enhance the version of the law to be more compatible with the Sharia law. So this, as I mentioned, is a challenge, I agree. This is why some of the Sukuk issuance try to avoid the litigations, official litigations, and what suggests the arbitration clause. No, arbitration clause is the exit of this legal challenge in the market, whereby they may go to International Center for Arbitrations, International Islamic Center for Arbitrations, Reconciliations of Dubai as one way, or they can go to the normal mediations or even arbitrations in some local or regional centers in order to address the issues. They only go to the court as a last resort, and if they go to the court, basically the Sharia will be overruled, especially if you refer to UK and other jurisdictions, because Sharia is not recognized. So those are the challenges that we have when it comes to the Sukuk issuance, when it comes to some litigations and some disputes and some defaults. And those challenges are applicable at the international level, and they are applicable also at the local level. So this is the sessions of the conventional versus Islamic with some of the legal challenges. Let's move to the last sections, which is related which is related to the Sukuk structuring Sukuk pricing and Sukuk trading and see how much we can cover. We start, of course, with the Sukuk structuring. But before that, let me just make a very quick check on the chat box if there is any question. Okay, no questions. Let me carry on. So let's start with the structuring of the Sukuk. Meaning, if you want to do a Sukuk, what kind of structure we should select? So number one, we have to appreciate that when it comes to the Sukuk structuring, the Sukuk could be issued by governments or corporate. That's number one. Number two, it could be issued based on sale based like Salam, Murabaha, Istisna. Could be on a partnership based, Mudaraba and Musharaka. And of course, Muzara'a, Mugharasa, as highlighted by IOF standard 17. Could be based on agency. In agency, normally it is coupled with Ijara with others, or lease based like Ijara, whether it is a normal Ijara, or إجارة موصوفة في الدemo, which is forward lease. Now, before we go to the structure, quick summary how all these 1, 2, 3, 4, 5, 6 structures, because we cannot go through all the structures. That's number one. Even if you go one by one, it should be very brief because each one may need a lot of discussions and details, but we don't have that ample time. We try to go very brief on that, but still we are open for any further questions. So let me just get a very quick highlights on each one, then we go one by one. So the first one, basically looking at the underlying contract, of course, the first one is Ijara. Obligor, who is basically the Mudarib or the issuer, is basically a leasing of the asset. He will be the leasing, meaning he is the one who will be paid, who will pay the rent. And practically, this is under the structure of sales and leaseback, meaning that the originator will sell, then the SPV will lease back. Then the rental will flow to the trustee SPV, then to the investor. So the leasing is the originator. The lessor is the investor, meaning that the Ijara, the owners of the asset are the investor. Then they lease out the asset to the issuer parental, the money flow as a periodical lease payment to the Sukuk holder. And at maturity from sales of the asset, meaning upon maturity, if it is 10 years, after that, what they will do, they will sell the asset back to the issuer and they redeem their investment. So that's the first one. We'll go structure one by one, but this is over descriptions on how it is basically behave. Wakala, basically, it is an agency. So basically, the originator, Barat shouldn't be the Mudarib here. Shouldn't be only the originator. Correction. Only the originator, not Mudarib. So the originator here is the agent who is undertaking the assignment, meaning he will be appointed as the agent. And the investors are the principal who give the money. And basically, a claim or the cash flow of the Sukuk will be from the cash flow generated by the investment. Because keep in mind, Wakala is an investment portfolio. Is Wakala, Mudaraba, Musharaka are investments. Mainly investment, meaning that the money will come from the investment return. Whereby Ijara, the money will come from the performance of the asset. So you have to, then Salam will come from the sales of the Salam products. Istisna will come as a result from the sales of the manufactured assets. So that one, it has to be highlighted, as I mentioned. Selecting the contract will determine how the Sukuk behave, will have impact of the positions of the originator and the investor, have an impact from where the cash flow is coming, and how is the maturity, what's so-called ends. So again, mudaraba, the originator is the mudarib, who is the entrepreneur, is the one basically who needs funding. And the capital provider are the sukuk will give their money. And again, the return or cash flow will come from the periodical cash flow from the asset as determined by the profit sharing ratio. Meaning if you have 30% or 50%, and again, it is based on the performance. It depends. Sometimes the money is invested in a liquid, so from the return, and sometimes it is investment and converted into hard assets. So it's become, let's say, I'll just give an example. The Mudaraba funds, the purchase hospital. So basically, what become the hospital become the underlying investment portfolio of the Mudaraba, and as a result of that, the return from the performance of the hospital will represent the cash flow generated from the Mudaraba, distributed according to the profit sharing ratio, let's say 50-50. So it doesn't mean Mudaraba and Musharaka will stay always cash and liquid. It depends what's in the mind of the Mudarib. Is he going to keep it cash liquid? Is he going to buy different companies? It depends what kind of investment, because we don't know what the investment looks like. So the investment will determine the return and the rules of the game. Salam, so the originator will be the seller of the commodity, will be delivered later, and the purchaser will be the investors, because upon the sukuk issuance, the owner of the salam will be the investors, and the proceeds will come from the sales of the goods, and the istisna, the purchaser of the asset underlying constructions, is the originator, and the investors basically are the investors are basically the owners of the owner of the assets, and the payments come from the payments upon its selling, through installments or lump sum amount. Mudaraba is the same, Murabah is the same. The originators purchasing the asset, and the investor finance the purchase, meaning at the end of the day they are the seller, and basically by a right accurately should be the seller. The Murabah will be the seller, and the cash flow will be coming from the payment. That's just over descriptions, high-level descriptions. Touch upon each one before we dive to detail each one of them. Let's start with the ijara. I try to be here for the sake of the time, try to be a bit brief, but again, we still have time for Q&A, and we still have time for a session tomorrow to recap whatever has been missed. Let's go to the ijara. Ijara, as mentioned by IOF standards, is basically is a represent ownership of equal shares in rental real estate or usufruct of the real estate. These sukuk give their owners the right to own a real estate, receive the rent, and dispose it to their sukuk in a manner that does not affect the rights of the lessee, and they are tradable, and the holders of the sukuk bear all the cost, maintenance, and damage of the real estate. So this is the definition of ijara. So if I describe, just to avoid that, just to avoid reading maybe the steps one by one, and because we have a few structures to cover, I'm worried that I will read one by one. It may consume time. So what I will do, I will just read the definition, then I will describe the your own. You can read the steps just to save a bit time. So basically, as I keep saying, on the ijara clients, or you have the issuer, and you have the SPV, and you have the investor. So as I mentioned, the clients or the issuer or the obligor will declare its assets on trust in favor of the investors in the SPV. SPV will purchase those assets SPV on behalf of the investor lease back the assets to the issuer pay renter flow to the investment as an income rental. Upon maturity, the SPV on behalf of the investor sells the asset to the issuer back and they redeem their capital. So if you have a hospital will be sold, or let's say hotel. If you have a hotel will be sold to the SPV. SPV will lease back the hotel to the issuer pay rent flow as an income, periodical income to the investor. Upon maturity after 10 years, the SPV sell back the hotel to the issuer and the investor redeem their investment. So that's the Sukuk Ijara, which is sales and lease back structure. Of course, we have a different types of Ijara. As I mentioned it, I give some example at the beginning. I mentioned that there is this is a hard structure I was talking about, but there is a soft structure on the manfa'a. I have mentioned it. If you remember the example I give on the airlines to Jeddah, securitizations of that kind of trips. I talk about securitization of the educations of the university. Then we'll talk about the service, securitization of training and so on and so forth, educations. All these are basically under the portfolio of Ijara. Again, forward lease, meaning that asset to be constructed in the future, let's say after 5 years. That tower to be constructed after 5 years, to be leased out and generate income. So what we will do, we will issue Sukuk now. The asset does not exist. We didn't start even the project to be ready and in existence after 5 years. After 5 years, start operate. So we can raise Sukuk to that one. So this is a structure called Ijara and Istisna, or we call it forward lease. And the 2017 Sukuk issuance that I have highlighted in the green Sukuk, it was based on this. It could be used for constructions and what's so-called manufacturing. So it is Istisna plus Ijara, or briefly we call it Ijara Mawsufa fi Dhimma, or forward lease. So this is an innovative structure as well, and the portfolio of Ijara. So again, there are lots of types of portfolio of Ijara that could be designed using hard structure or soft structure. But here we just give an example of one due to the time constraint. Now the second one, the following one is Musharaka. Musharaka is a form of partnership between the Islamic banks and its clients, whereby each partner will contribute basically to the capital of partnership and equal. So again, Musharaka is a partnership. Partners will come together, put money, create ventures, do business, profit generated, share, according to agreed profit ratio, let's say 50-50. That's how it works. And again, Musharaka, this is one structure. This is a live structure of Musharaka. And as you can see here, without going to the details, so what we have the corporate, which is one partner, and the SPV. Now the SPV will be representing the investor as a partner, teaming up with the corporate, who is the issuer, to have a partnership, which means the issuer and the SPV become partner. In other words, the issuer and the investor become partners. Through what? Through the SPV. Then the money will go from the investor to the SPV. And these corporations, maybe if we are talking about corporations, maybe their assets is 20 billion. But when you invest, you want to raise 1 billion. So they will allocate a business portfolio for the Sukuk issues. Maybe they will say the partnership between the SPV and the electricity company is for, let's say, Dhaka business portfolio, meaning other states are not included, because they have to reallocate the business portfolio between the SPV and what kind of business. Because if you have 20 billion, you're not going to go with a partnership with your 20 billions because of 1 billion. So it is an injections, from one side to another side. So what happened is the investor will come with cash worth 1 billion, and the corporation will come with an equity in a term of business portfolio worth maybe similar of 1 billion, or depend on the agreement, create a portfolio, they invest, then they share the revenue based on an economic cluster. So that's basically how is the structure of the musharaka. And this is the same for the second type of musharaka. You have a many investors go with the issuer, team up through the trustee or through the SPV, build a partnership portfolio, invest the money, and generate and share. The business will go. Then they will do semi-annual distribution of the profit until the maturity. So that's how it is. Upon maturity, so the investors or the SPV will sell back the investment portfolio to the issuer, then they exit. Keep in mind, if you select ijara, rules of ijara apply. If you select musharaka, rules of musharaka apply. So you have to be careful on the rules, term, condition, and obligation. The second one is the mudaraba. The mudaraba is again partnership. One invests cash, the other one invests his time. It's a combination of work and effort, whereby they will share based on partnership. They have a business, then they share the profit according to the business profit sharing. So what's the difference between mudaraba and musharaka? Musharaka, both partners contribute money. Both partners have the right to manage the company. Both parties share profit and loss. But mudaraba, only one party inject money, the other party inject zero money, only his work. And there is a profit, they will share according to agree profit ratio. If there is a losses, it will be 100% borne by the capital provider, and the mudarib bear nothing. So basically that's the difference between mudaraba and musharaka. So despite the partnership, both are partnership, both are equity, but the rules of mudaraba versus musharaka are a little bit different. And the difference again, musharaka, both parties contribute, mudaraba, only one party. Musharaka, both share profit and loss. In mudaraba, share profit only, both share profit, but only capital provider will bear the losses. And the mudarib will bear the losses only in case of negligence, misconduct, breach of the term and the condition, then he will be held liable. And it is allowed in the documentations to capture this clause provided it is tied up to the negligence. If it is not tied up to the negligence, it will be regarded as a guarantee in the equity, which is against basically the IFRS standards and against the practice of the Sukuk issuance. So again, mudarib will be the issuer, then the Rabbul Mal, who are the investor, put the money, then they will create mudarab Sukuk. Then what they will do, they will invest into mudaraba ventures. That money, it depends where it goes. It goes to a business of the issuer. It goes to the business of the issuer. Then the issuer will be assuming the mudarib, or it goes to a third-party investment. That's the what kind of investment. That's the details that normally will be provided later on to design the profit accordingly. But what is important is the structure. Business, everyone has a different thinking, wants to buy a hospital, wants to buy a hotel, wants to start a long-term project of 10 years, the other 20 years, the other one wants to create apps. So a lot of innovation could be here and there. It's an investment, and investment is very wide. You have private equity, you have venture capital, you have REIT, you have a stock, you have basically different types of investment classes that you can do. Salam, again, Salam is a contract of basically a certificate of equal value issued for the purpose of mobilizing the capital of Salam, and the goods will be delivered on the basis of Salam and to be owned by the basically certificate holder, meaning by the Sukuk holder. Again, originator undertake to buy a commodity. and the investors will flow the money, and basically the money, the commodity will be purchased, and upon sales, basically the proceed goes to the seller. Sorry, to the investor. Istisna is a constructions portfolio, is a construction portfolio, and it is a manufacturing contract, and it is basically related to constructions, manufacturing, and food processing, whereby salam, as discussed, it is related to agriculture and natural resources. I say again, the difference between salam and istisna. Salam is more related to agriculture products, natural resources like livestock, fish, and so on and so forth. And istisna is related to manufacturing, constructions, and food processing. If I just make a very close distinctions between the two in one product, crude palm oil, for example, or crude oil is salam. Refined oil is istisna. So the crude oil is salam. Refined, meaning after being processed, refined oil is the istisna. Fish is salam. Tuna is istisna. Because fish, you get it as a fish from its origin. Tuna, you have to process it. You know, orange is salam. Orange juice is istisna. And it goes like this. So food products, agricultural products, and natural resources, gas, copper, and so on and so forth, this is salam. Constructions, manufacturing, food processing, that one falls under istisna. Both are sales. Both are sales, and both the subject matter upon the executions of the sukuk issuance, the asset does not exist. You see, this is again one of the unique features of Sharia compared to others, shows the flexibility of Sharia. In the murabaha, the asset must be in existence. In the ijara is not required. Salam al-istisna, it is not required. This one, musharaka and mudaraba, the initial stage is liquidity when you create the sukuk issuance. Now, where the liquidity goes, where the money goes, the sky is the limit. You have a different type of business. Of course, that one has to be determined before, but I'm just saying the potential where to invest. So you see flexibility of Sharia. Sometimes it is an investment on the return. Sometimes it is related to underlying performance. Sometimes it is related to something that will be created in the future, and so on. So that's the beauty and the flexibility of Sharia. So again, here the structures of istisna. So what we have the SPV that's representing again the investors managed by the trustee. Then you have the contractor that basically construct the university of the hotel or the commercial building, which will be owned by the sukuk holders, and it will be going to a third party end buyer where they redeem their money. Each account goes, the originator could be the issuer, the mustasna, and could be the end buyer as well. All the potentials are open. It depends what kind of arrangement they may have. In addition to this quick list of sukuk that I have had, there are other innovative structures that are coming up in the market as well, like exchangeable sukuk, like forwardless sukuk, like perpetual sukuk, like hybrid sukuk, like CSR sukuk, like green sukuk, like sustainable sukuk, like SDG sukuk. All these are basically innovative structures that are coming up in the pipeline that has been issued, that basically expand the portfolio and the demand. And according to the S&P, basically 500 report of 2020, the SDG criteria is regarded as one of the accelerations factors for sukuk issuance in the future. I mean, 2021 and beyond. And we have also the retail sukuk that we may talk about it tomorrow, that we have a structure of sukuk as well, try to go for financial inclusions. That's basically the quickly, before I carry on, I have to maybe make a stop here at the same time. Look, if there is any question, what I have displayed is a very quick review on the structures of the sukuk. Let me go if I see any question. Yeah, inshallah, I think the requested the materials to be shared. I think the organizer will do that, inshallah. And we have a guest of honor, chief guest, Muhammad Omar Al Ansari, the Secretary General of IOFI, will be with us afterwards to share his thoughts. Let's see what are the questions. Yeah, there is a question here. He said, can we issue Ijara Sukuk of unused land? If yes, how cash flow generated by the investment? Well, here, can we issue on the, if I understand the question correctly, because it may be understood from two different angles. I think the first angle, meaning that if we have a land and that land it is unused definitely, and whether we can issue ijara, meaning here one of the things that I understand, whether we can use the land as an underlying asset to issue ijara, and the answer is yes. And why? Because at the end of the day, land is asset. Not only asset, is very important, valuable assets. Depends on the location. You say unused land, yes, I agree. But if you go to anywhere and you want to buy unused land, it depends on the location. It could be in the city center. It could be on even it is well, depends on the location. City center, in a very premium land, in a very good occasions, and so on and so forth. So it has a value. Meaning it has a value. So what you can do, you will securitize that land based on the value it has. And now, when it comes to the what's so called productions, or the productivity when it comes to return. So it depends what kind of investment you are doing. So you may have a tenure of, let's say, 15 years, or normally these lands normally will go for a long-term lease. If it is a government, it is 99 years, or at least like in the case of Zamzam Tower, it is a 25-year lease on a Waqf land. So you can go to 25 years, and the project basically will take, let's say, 3 to 4 years to establish. So you have enough time that that asset will be productive. And this one, the best way to do it is the forward lease structure, meaning that since the asset does not exist, basically what you can do, you do forward lease, meaning that you will contract on a tower, on a hotel, on a hospital that will be productive after 3-4 years, that it gets cash flow in the future. That's one way. And if it is, let's say, land that it is unused, but potentially could be lent out to a third party, even it is agricultural land to be cultivated by third party, because keep in mind, we have, if you look at the IOFI standards, they mentioned the sukuk of al-mugharasa. I didn't mention it here, just so I just maintain the industrial structures. But if you go to the IOF standards, they mention the Mugharasa structure, which is the agriculture-based Sukuk, and they mention the Muzara'a structure, which is agriculture-based. This Muzara'a, Mugharasa, these are agriculture-based product per se. It could be some kind of agriculture activity to be used. And basically the return from that agriculture land would be the return that creates, sorry, that creates revenue to the Sukuk holders. And if not, it could be leased out to third party for whatever activities. Here, as I mentioned, the answer is yes, but how to do it, that's the need a new diligence, a kind of visible study to see the potential of the land. You know, what kind of best project that you can, is it agriculture? Is it a commercials? Is it a hotel? Is it just land? Is it a parking lot maybe? I don't know. If agriculture, you have Mugharasa and other structures, agriculture. If not, you can do it, and it goes like this. So the answer is yes. And the Sukuk issuance of 500 million of Malaysia, what they did, they securitized 2 hospitals and 1 land in Duta, Jalan Duta. Jalan Duta is a very premium land near Kuala Lumpur. Within Kuala Lumpur is a premium land. So it was a combination of 2 hospitals and a piece of land that create the portfolio of the 500 million securitizations at that time. So yes, land has a potential and has a value, and the value will increase, and as a result of that, of course, return increase substantially. This is the questions that we have in the chat box. I just want to check with Raisa if whether we are time or shall we carry on. I give get the advice from her. Sister Raisa, if you are there, I still have time. I carry on, or this is because I have to open a new section.
Yes, sir. We have only 10 minutes.
10 minutes. Okay, let's benefit from this 10 minutes. We just put the time to make sure I'm on time. So okay, fine. So let's benefit from this 10 minutes. So what have been discussed actually is the structures, and I just seek apology. It was a bit quick, and by right, I think if in the future, inshallah, when there is no pandemic, normally this kind of structures is a group discussion, just to share with you. It's a group discussions, and we take structure one by one, then we take live case studies, then we give simulations, then we do it on board, and what to do. So this pandemic put us in a different flow of interactions, but hopefully it will go off and be back to normal as usual. Anyway, so this is briefly the descriptions of the structures. Now I want you to go to this within this 5 minutes, 10 minutes, a little bit on the documentations. I think I've already highlighted a little bit in the previous sessions that in the documentations, what we have normally, the first one is the structure of the Sukuk. And it is mentioned very clearly in the prospect of the IOF standard number 17. I mean, you have to determine your structure. Again, we have provided a list of structure, which one you want. And again, it's a buffet, so up to the originator. So as mentioned by our brother, if he has a land, he maybe choose, and it is agricultural land, he may use an agriculture-based Sukuk structure. If it is a premium land in the heart of the city, he may maybe do kind of istisna structure. Maybe if it is agriculture, again, he may do salam. If it is has a potential rent, maybe he do it ijara. So it goes back to what's in the pocket of the issuer. Number 2, the PTC. Maybe tomorrow I will share with you some sample of the PTC in the chat box so you can reflect it. The principal term and condition is basically the entire prospectus of the Sukuk issuance that basically puts all the information details about the PTC. And normally, the review of the PTC will give you end-to-end understanding about the Sukuk issuance from A to Z, including, the information of the issuer, the structures, the terms and the conditions, the tenure, the rating, the Sharia advisor, all the parties, it is very important, very crucial. And with this, practically, with the structures, PTC, then we add the Sharia pronouncement, the last one, on the app on the right side. These three normally, Sharia structure and the PTC and the pronouncement, this is the one that will be submitted to the AC Security Commissions for approval. Then it's followed by the legal documentations, because in some structures I have seen, like Ijara, it has sometimes more than 12 documents. More than 12 documents. I think we will discuss part of it tomorrow. You have a lot of documents, the purchase undertaking, the sales undertaking, the lease management, the lease agreement, the substitution agreement, a lot of things, within the lease contract. And the same for the musharaka. So there are legal documentation to be drafted. Then it's followed by the sequence of the execution, how these documents will be executed. And in some of the Security Commission, they will request the sign off of the Sharia advisor that the sequence has been executed according to the plan. They will get the sign off. It's not just, it is a separated document that they have to sign, that the Sukuk issuance happen. Because one of the very major Sharia non-compliance risk and issue is the compromising on the sequence. Just give you a very simple example. If you have a lease contract, what you have to do? You have to buy the asset, get ownership, then lease it out. You cannot lease it out, then you buy. Sequence is important. Murabaha, you buy, then you sell. You cannot sell, then after that you buy. So that's the importance of the sequence. Sequence is very important to make sure that the flow honor the Sharia requirements. Otherwise, you may end up in a kind of a contradiction. So in some jurisdictions, there is a separate documents that the Sharia advisor will give the sign off that will has been practiced according to the market. And the prospect, as I mentioned, it is more integrated or derived for marketing purposes from the PTC. So this is the overall documentations that you may find in the Sukuk issuance. And maybe for just to share with you, maybe tomorrow I will post in the chat box one of the PTC or 2 or 3 PTCs for you, for your reference. Then you can see the entire descriptions of the Sukuk issuance that give a very comfort level to the what's so-called Security Commission to give the approval. I think I will stop here. The other discussions, I think I will leave it for tomorrow. With this, I will just open again if there is any question to entertain. Otherwise, I will give the mic to Raisa.
Thank you, sir. Dear participants, if you have any question, then you can raise your hand or you can write in the chat box. You can ask directly your questions, please. I think there is no question, so we have to conclude our today's session. Thank you so much, Dr. Ehsan, for the insightful information.
Thank you.
Yes, thank you so much, sir, Dr. Ehsan, for the insightful information that you shared with us. The presentation was very outstanding, and you explained it in a very details. Hope all the participants now understand the concept of Sukuk. I really appreciate your way, in which you deliver knowledge. Thank you so much. Dear all participants, thank you for your patience and cooperation. Hope you enjoyed the today's session. We will meet again in tomorrow's session. Now you all can join the Zoom link of closing ceremony as I shared in the chat box. Thank you very much.